We turn to Jin Yoon. We're also going to have a look at some of the other companies in the internet space here in Asia as well. And Jin is Regional Head of Internet Research at Nomura Asia. Jin, thanks for coming in. What did you make of the numbers here, and are they going to be profitable at some point?
You know, I think the profitability is going to take at least a couple more years, because right now the business is really not scalable, because it's settled with a very high fixed cost structure, which is bandwidth and really the content costs. Really, the more users you have, the more bandwidth you need, and the more bandwidth you have, the more users you'll
generate. It's a vicious cycle, isn't it?
It is a vicious cycle, and yet the advertising revenues are not quite there yet. But eventually, as people move from the traditional TV onto online TV, we think the advertising numbers will catch up.
But they've raised advertising rates, haven't they? They did that just last week, I believe.
Certainly, but the thing is, what they actually raise and what the actual discount rate is, still there is a gap. And so we think that the actual raising of the advertising dollars versus the discount is not as significant. And so what we really have to do is look at the transition from TV to internet, and which will take, you know, approximately a couple more years until the company becomes profitable.
Down 10% in after hours. I mean, would you be a buyer here?
You know what? We do like the fundamentals of the stock. I mean, we think that you know, it has that first mover advantage. Plus, we think not only is it the YouTube model, but we think it has potential to be the next Netflix model in China.
Right. Now that's what I'm coming to. I mean, what is it closer to? And, you know, if you look at the path that you know YouTube did take, you know, how much can you actually apply that to Youku?
We think right now it is more of a YouTube model where it is a pure online video service, but can it get to more of a video streaming and subscription model going forward? We think the subscription business for Youku is really small right now, but again, with premium content coming on board, we think that's definitely a possibility.
Right, let's talk about some of the other companies in space. Now, one, I didn't even know about it a year ago, but hasn't it grown? Groupon, and how it's been taking over companies around the world?
Right, you know, the whole group buying thing has certainly been a phenomenon, and certainly it's making its way into China. And Groupon coming into China, we think it's going to make a big splash, because the SME market in China is quite big with over 42 million. However, you know, in China it's going to be a little bit more interesting, is because we already see Groupon.cn, which is not even actually part of Groupon. It's actually a knockoff site using the same name.
It doesn't have first mover advantage. There are more than one company doing that. Mind you, you've got 450 million internet users there, so there's plenty of room.
But, you know, it is a bit of a jump ball in China, because in the U.S., Groupon was kind of the first mover advantage, so they gained quite a bit of market share. But with a lot of the copycats in China going up all at the same time, certainly there is going to be a bit of a jump ball factor. We know Tencent and Groupon has a joint venture with Gaopeng. We think Sina and Baidu and all these other platforms will eventually have a group buying site as well.
Right. Do you think it's going to be a success there in China?
Yeah, we think it is, because the thing is, you know, as people move more to e-commerce and online shopping, certainly people are going to look for bargains, and certainly Groupon and businesses like it will certainly offer that.
Okay, now in terms of business to business, and we've had, of course, resignations at the top, the chief executive and the finance director, I believe, going, or the operating officer going. Alibaba.com, trials and tribulations of that company. It's one that you, well, don't really care for that much when it comes to as a stock.
Right, you know, I think a lot of investors feel like, you know, where there's smoke, there's fire. And, you know, a lot of people don't make sense of the fact that the CEO and the COO lost their job over basically 1,000 fraudulent accounts, which is less than basically 1% of their customer base. And certainly we think there's a lot of people underneath that food chain that should have gone long before the CEO and the COO. To get up to that level, we think that there's certainly more to the story.
What about the business model itself here as well, Jin? I mean, people saying that this whole subscriber thing, you've got to pay a license fee, etc., that it's just wrong, and they should just remodel it.
Yeah, you know, I do agree with the fact that the subscription model, which is about 30,000 renminbi for the year, is probably not so sustainable, because of the fact we're seeing a very high level of churn rate. But the company is trying to do away with that by offering more value-added services, and value-added services are increasingly becoming a bigger percentage of their revenues.
Jin, pleasure having you on the program as ever. Jin Yoon there from Nomura Asia, just having a look at the internet space in Asia.